Welcome to the Runway, where we cover current events in crypto, Web3, and tech. It's important to note that the views expressed here are personal opinions, which can evolve over time as new information surfaces. The Runway is designed for educational purposes. You are responsible for your own decisions, due diligence, and research. Hopefully this content helps provide some value and insight to help you on your personal journey. It's Wednesday, October 25th. Let's dive in. First up today, we have crypto wallet maker Ledger officially rolls out Recover, unleashing fresh round of snark. Recover involves users' private keys being encrypted, duplicated, and divided into three pieces held with three different parties, which has spurred controversy. This has been a pretty contentious decision by Ledger for quite some time now. They've discussed this idea of taking your cold storage hardware wallet that they provide and basically have it send out its private keys. Even though they are sharded into three different pieces, the fact that the technology exists at all from inside the device is a little bit concerning. That's what one side of the equation seems to be saying, and in my opinion, I think it is somewhat concerning. This is an obvious service for people that still want to have their crypto not on an exchange that could potentially be hacked or have their funds stolen. They'd like to have this option, and I think that it's important to have an option like this for people. Where Ledger really gets this wrong is the idea of the device itself basically sending off a shard of your private key to three different entities. Like anything else you do on your Ledger, you have to authorize and approve that transaction by physically pressing the device. And I think this is probably something similar. Ledger could make, certain devices that might have this functionality and certain devices that don't have this functionality, because a lot of crypto natives and people that have been in the space for a long time, myself included, do find this troubling and concerning. And I think that Ledger really botched their response when it came to addressing and dealing with sort of this controversy. Their marketing department did a really poor job when it initially came out. So I think they really do need to do some damage control here. If we come back to the article here and we look at kind of what the CEO Gauthier, what he's saying. Gauthier's announcement of this optional paid-for service was met with a fresh round of snark from ex-users this week, restating the claims that Ledger is asking customers to pay to make their private key more vulnerable. Ledger's CEO has maintained, however, that this service is meeting demand from users who want to know that their crypto holdings are not at the mercy of them remembering a random string of words. Too many people have lost their digital assets because they've lost their secret recovery phrase, he wrote on X. This risk stops people from using crypto and certainly from using self-custody. I think he does raise a good point here. I think it should be an option that is available in the market, but I don't think it should be something that's rolled out to people that already have these have devices, that it's a part of a software update that they rolled out that all of a sudden this functionality is sort of unlocked. And I think there's been a lot of calls to have Ledger's code examined, and I think it is. I believe it's still closed source. People are rightly upset about this, and they should at some point have some independent security reviews that are done. So speaking of this, let's actually hop over to this story here about the Ethereum network, and speaking of using white hat hackers to probe and test security, this announcement came out today, I believe. The cybersecurity pro gets paid to hack Ethereum for the good of the network. One of the techniques that his team deploys to protect the blockchain is fuzzing, a term borrowed from the software development industry that's become a common way of checking to make sure a system is secure and resilient. The security researcher at the Ethereum Foundation, David, is testing and probing the network to see if he can find security flaws. Theodore 33 is one of about 10 computer engineers and cybersecurity professionals on the Ethereum Foundation security research team, based on a slide presentation from June. They cast themselves as the ultimate maintainers and guardians of the fast-growing network, seen by some blockchain expert as the foundation of a future global digital and decentralized financial systems. The Ethereum Foundation, created by blockchain's famous founder Vitalik Buterin and set up to support development of the network, boasts a workforce of roughly 150 people, according to the slide presentation. Most of the focus is on constant programming upgrades, growth initiatives, sponsoring developer conferences, and providing grants. This group of security researchers, I think, is very important to probe and test a lot of flaws in the network. And I think some other networks, for example Solana, could have been well served to have the Solana Foundation set up and have some of these people probe and test and make sure there weren't critical flaws like some of the ones that resulted over the past few years that caused the network itself to go down. So I think this is a very good thing for the industry, and I think that companies like Ledger in the previous story, should be doing the same thing. I mean, they really should. And it is, there are other options in the hardware wallet space. I do think that Ledger is serving a purpose, and they're offering a product in the market, and I think there is a need for people who want to have that recover service. I think it's a good option, but I do think they should fundamentally separate at a hardware level the devices that would allow something like that to happen and the devices that don't allow something like that to happen. And I'm by no means a super technical individual, but I think by making that distinction, by having that option and making that distinction, they would have saved a lot of the controversy and drama that's surrounded this whole announcement. Let's move on to the next article here. Mastercard teams up with MoonPay for Web3 push. MoonPay will incorporate compliance-friendly Mastercard's crypto credential system and integrate payment tech like Mastercard Send and Click to Pay, according to a blog post. Mastercard has teamed up with MoonPay, a cryptocurrency and non-fungible tokens payments app, to explore how the blockchain-based Web3 world can connect with and build loyalty among consumers, the company said at the Money 2020 event in Las Vegas. Card networks like Visa and Mastercard have been busy around Web3, working on areas as diverse as stablecoin-based payments and removing gas fees from Ethereum transactions. Most recently, Mastercard was revealed to be working with non-custodial wallet firms MetaMask and Ledger, according to a Web3 workshop presentation. The partnership allows MoonPay to avail itself of Mastercard's crypto credential system, a way of ensuring transactions are trusted and compliant with regulations, as well as integrating payments tech like Mastercard Send and Click to Pay, according to a blog post. In addition, Otherlife, a subsidiary of MoonPay that provides Web3 creative agency services, development, strategy, and experiential services, will play a key role in the partnership, it said. We're excited to collaborate with Mastercard, a prominent supporter of Web3 and the digital economy, to redefine customer loyalty and engagement, MoonPay's co-founder and CEO Ivan Soto-Wright said in the blog post. Mastercard first began working with MoonPay in 2022 as part of an initiative to allow cardholders to buy NFTs. So I think this is more of the same. There's going to be continued collaboration with major Web 2 companies and, exploring Web 3 and gaining from the efficiency of some of these networks, especially with Ethereum and a lot of the layer 2s built around that ecosystem. I think that Mastercard is wise to start exploring this option. You can have faster settlement times on these L2s, instant finality, and you can just move money around faster without having to rely on banks and different processors, and you're going to be able to cut out a lot of middlemen and fees with these transactions and have much faster finality and settlement on some of these L2s and just on blockchain networks in general, and a lot more transparency as well. Let's move on. Institutions race for Bitcoin, sending CME open interest to record high. Open interest for the CME's Bitcoin product hit 100,000 Bitcoin, $3.4 billion, for the first time ever. Institutional investors are chomping at the bit to buy Bitcoin, BTC, amid renewed optimism of the spot exchange-traded fund, ETF, being approved. The world's largest cryptocurrency rallied to a 17-month high of $35,000 on Tuesday after the ticker for BlackRock ETF showed up on the Depository Trust and Clearing Corp, DTCC website. To break out above the 31.8K resistance level coincided with a drop in open interest, a metric that assesses the notional value of all derivatives positions across crypto exchanges, according to Coinalyze data. The decline, which reflects retail investor interest, contrasts with the open interest on the Chicago Mercantile Exchange, CME, a venue favored by institutions, topping 100,000 Bitcoin, $3.4 billion for the first time. CME's market share has increased to around 25%, approaching that of Binance's perpetual market, according to Vetley Lund, a senior analyst at K33 Research. CME has also captured an 80% market share for all traditional expiry futures. Daily trading volume for Bitcoin futures on CME hits 1.8 billion in the past 24 hours, with 10,942 contracts worth 5 Bitcoin apiece changing hands during a volatile trading session. There is also intense buying pressure in Asia, with the Hong Kong CSOP Bitcoin futures ETF reaching 22.37 million in trading volume on capital inflows of 17.64 million, a record for both volume and inflows. The previous daily turnover was between 125,000 and 250,000. Wow. So we're seeing a lot more interest from institutions here, purchasing Bitcoin, trading Bitcoin, and I think you're seeing the CME sort of close the gap with native Web3 companies like Binance's perpetual market. The Chicago Mercantiles Exchange has tons of credibility, and it's been around for a very long time, and it's a venue that's definitely favored by institutions, as mentioned in this article. So I think we're just going to see more and more of that. If institutions are coming to play, they're going to use some of the more trusted and established infrastructure, especially with futures contracts that have big payouts. If you're right or wrong, if you're wrong, you just lose what you invest. But if you are right, you get huge potential payoffs. There's been a lot of Binance FUD going around, and people have their opinions on the matter, but a lot of some people are skeptical in this market, and with what's happened in our industry in the past 18 to 24 months, it's definitely worthwhile to be skeptical. Don't trust, verify. So institutions like CME that have that credibility, that have been around for decades, are going to see liquidity and are going to see trading volume, and I expect that to grow as we move into over the next decade for sure. Let's dive into our next story. Binance again seeks to nix incendiary CFTC suit. U.S. law does not control the world, said a court filing by the world's biggest crypto exchange as the regulatory heat intensifies. Binance renewed its push to fend off charges from U.S. commodity regulators on Monday as the world's biggest crypto exchange faces increasing heat from enforcers. The exchange says the Commodity Futures Trading Commission is trying to police the world by taking action against the company, which on paper has sought to avoid U.S. business. The CFTC relies on new and broad arguments that would allow it to regulate any activity in cryptocurrency or other assets related to a derivatives product anywhere on the globe, said a filing made by Binance in an Illinois court late Monday. U.S. law governs domestically, but does not control the world. Congress did not make the CFTC the world's derivatives police, Binance filing said, adding that the agency's complaint resorts to incendiary language against Binance and Zhao. In March, the CFTC charged Binance with knowingly offering unregistered crypto derivatives. In a subsequent September 22nd filing, the agency said Zhao had deliberately targeted the U.S. market, and that, in any case, U.S. commodities law explicitly governs foreign conduct. Binance has embraced a wink and nod corporate ethos toward getting U.S. customers through creative means, the September filing said, citing industry events such as a Binance-hosted Grammy party in Las Vegas. Binance and Zhao's refusal to comply with regulatory requirements have made Binance a haven for darknet users, criminals, and terrorists that wish to move their assets around the globe, the regulators' filing added. Domestic business is handled by a separate entity, Binance.US. Both companies are also seeking to toss a suit from another federal regulator, the Securities and Exchange Commission, and there have also been rumors of a probe by the Department of Justice. Binance is saying is that U.S. law does not control the world. These are some extraordinary claims that the CFTC is making. Binance is deliberately targeting customers, with their international business. I think is kind of ridiculous. They've banned customers from using their international exchange, and they've basically made it all but impossible, unless you're a very skilled computer wizard, to evade the blocks that they've set up. It's really a pretty extraordinary claim. I mean, how much do they really have to try to stop users when they've done KYC requirements, they've done IP bannings, they've done all sorts of things. I mean, their job is to run their business. The U.S. made it hard for people to gain access to investment products in the U.S. and to be part of this ecosystem. And Binance has opened a U.S.-based exchange. And I'm not defending Binance here. I'll tell you that I do agree with some of the sentiment here that it's kind of a little bit over the top, and it's a high bar. Hopefully, extraordinary claims require extraordinary evidence. Binance hosting a Grammy party in Las Vegas means that they're trying to get U.S. customers to participate in their international exchange. I think the fact that Binance has a U.S. Domestic business is why they're hosting a Grammy party there in Las Vegas, because they do have a business that basically is pretty awful because they can't offer a lot of the stuff and products that international customers have access to. They basically made Binance US is pretty much useless in a lot of ways. But they did try to comply with what the US is sort of allowing there and try not to step on any toes. The SEC and the CFTC just need to get out of the way and let people make their own decisions and let business be done. And we've gotten to this point in our country where nobody has personal responsibility for anything. You make a decision, you don't have personal responsibility for it. And I think it's taken us to a very dark place, and it's sad. Let's move on here. Senator Gillibrand bullish on stablecoin bill and illicit finance legislation. The crypto-oriented duos of Senators Gillibrand and Lummis are pressing for smaller slices of their wide-reaching crypto bill to get done, and they predict TradFi's arrival in ETFs could help. Real quickly, they have to slice up what they part of their legislation and push stuff through when it's a very clear bipartisan effort between both parties. It's just an example of cooperation and crossing the aisle, and with two senators who have an understanding of the industry and who have done the due diligence and who have done some deep dives and who have come to industry events and who have engaged with people in the industry. Is it perfect? By all means, no, but it's a very positive and solid attempt to do right by the American people. And I feel bad for Senators Kirsten and Senators Cynthia Lummis. They've put forth some positive legislation with a bipartisan effort, and then they're just stonewalled by all the special interests and all of the incompetence with the rest of the political system. It's sad to see because they put this forth, this clearly thought out, and you see tons of people who are just completely uneducated on the matter, not doing the due diligence that they should to the American people. There's a huge potential for bipartisan stablecoin bill in both the House and Senate, Gillibrand said at CoinDesk's State of Crypto event held Tuesday in Washington. This is a measurable, doable goal for both chambers to have. A stablecoin bill cleared the House Financial Services Committee this year, but the Senate hasn't yet made as much progress, despite the Lummis-Gillibrand bill having addressed the topic. Even further along is a Senate effort meant to begin targeting illicit transactions in crypto, which exists now as an amendment on the Senate's defense spending package. That's now at the stage in which the Senate and House work out the differences in their bills, and if the crypto provision passes, it would set up U.S. examination standards and study how to combat anonymous transactions. The defense budget is likely to pass this year or early next year, Gillibrand said, and the senator predicted the crypto-focused amendment is likely to stay in. As for the wider, more ambitious market structure legislation for crypto, which would empower the U.S. Commodity Futures Trading Commission as a watchdog of crypto commodities trading, Gillibrand said that hopefully next year it can find some traction. She said the current posture of the U.S. Security and Exchange Commission to steer the industry with punishment is untenable. And I completely agree with what she's saying. It's completely untenable and it's completely unacceptable. Congress needs to act, she said. We cannot have the SEC regulating by enforcement. It doesn't work. The courts have said so. So it's important for Congress to do its job. Lummis said the traditional financial firms are showing up, especially in the space around prospective spot Bitcoin exchange-traded funds and other crypto ETFs. As mainstream finance moves into this space, I think people in Congress are going to see we can't have our head in the sand anymore, Lummis said at the same event on Tuesday, suggesting that some lawmakers will be more comfortable with the representatives of traditional financial firms. When they come into the room where the party's happening, she said of the TradFi people, they bring a lot of people with them. Both senators encouraged crypto firms to keep making their case in Washington, noting that most lawmakers still aren't well educated on the industry. And I can't agree more. Most lawmakers are not educated on the industry, which is a shame because this is, one of the, cutting edge tech spaces that is going to be a big part of, U.S. tax revenue in the future and U.S. growth and jobs. And it's very early. Imagine if, we screwed up the whole internet tech boom that occurred. If we weren't the place where all the, Web 2 companies were formed because we were antagonistic towards an entire industry that was in its infancy. And, I think we're seeing some of the same stuff now where we're in Web 3 and cryptocurrency is an industry that is in its infancy. We're very early on the S-curve of adoption, and there's a lot of uneducated, older congressional people that haven't done their due diligence, and it's sad because we should be leading the world on this in this area and in this space, and we're not leading. We're actually forcing industry and forcing jobs and forcing people off of our shores. So hopefully we'll get more people like Cynthia Lummis and Kristen Gillibrand in office, and let's do what we can to rally behind them. Guys, thanks for listening today. Hopefully you gained some value from this. Please like and subscribe for more content in the future. Hope you guys have a great day.